represent low-income taxpayers in their controversies with the IRS, but we also educate taxpayers in their tax rights and responsibilities. Welcome to our Facebook Live today. This is the Low Income Taxpayer Clinic's Facebook Live, brought to you by Legal Aid of Arkansas. My name is Jennifer Gardner, and I am the director of the LITC at Legal Aid of Arkansas. LITCs across the country represent low-income taxpayers in their disputes with the IRS, but we also educate taxpayers in their tax rights and responsibilities. If you have a question at any time today during this brief presentation, please submit it in the chat where you're watching, and we will get an answer to you promptly, whether you are watching this live or recording later on. Today I have Christina Weiss from Michigan State University with me today, and she will introduce herself later on in the presentation. Today we're going to talk about the gig economy and taxes, how that affects you if you are working in the gig economy. But before we do that, we are going to give you breaking news. I think everybody in the United States and worldwide knows that President Trump signed a new tax bill last Friday, July 4th. It made some changes in taxes and other things, but in taxes for 2025 and some changes for 2026. It's a very large bill. There are lots of hidden quirky items in it, and no one yet has a handle on exactly what's in there. What do you need to know? Well, there is a provision about tips. Tips are going to be deductible for those who itemize. Now, does that affect the gig economy? Possibly affects you if you itemize, but because of the sizable standard deduction, lots of times people who think they have eligible deductions don't make the cut, and it doesn't change their taxable income. The other thing that affects taxes is a no change, is that the bill essentially leaves tax rates the same for everyone. So you're not going to see a change in your paycheck if you are getting a W-2 paycheck. Essentially, prior law cut the tax rates, and then the question was whether the tax rates were going to go back up because the cuts expired, but they're being continued, so there should be no change. Let's see, the only other thing is that I think could affect a lot of people, or maybe people on this audience, is that senior citizens over 65 are getting an additional exemption amount. In other words, their taxable income will be cut a bit, so their taxes potentially will go down if they file a tax return. So my colleague, and certainly if you have questions about this tax bill, it's very complicated. It's hard to understand from, the big news media what's going on, but you can ask us and we can look it up and we can try to figure it out and let you know. So I'm going to let my colleague, Christina, take it from here.
All right, good afternoon. My name is Christina Weiss, and I'm the director of the Low Income Taxpayer Clinic at Michigan State University. So thanks so much for having me. So let's get started into the gig economy. What is the gig economy? So this is going to be something where you have a job that's paid by task or gig, as opposed to being under an employer's thumb where you have to go into work at a certain time. You are paid maybe a salary regardless of the tasks you do. So this is going to be something most people know as DoorDash or Uber Eats, things where you have a concrete task, you're paid for that task, and then you go moving on looking for something else to do. This is becoming very popular, if it's not already super popular, with food delivery, rideshare, babysitting, lawn care, housekeeping. And there's a lot now of interplay with apps where you can find these jobs through apps.
All right, I already have a question, Christina.
Yes.
How are you, does it matter how you're paid? Like, could you be paid by the hour? Can you be paid by a day? Does it matter whether you get paid every day or get paid once a week?
I would say it doesn't really matter how you're paid. It's just that you're paid by a particular task. So you could be paid hourly to complete the task, like maybe babysitting, or you could be paid a lump sum once the project's done. And that could be paid in a week or 2 weeks or as the course of the project goes on. The big difference between this gig economy and that we're talking about is in the gig economy, you're self-employed. And therefore you're not subject to an employer telling you what to do, when to show up, and dictating how much you make. And that brings us to the next slide, being self-employed. What does that mean? All right, so I talked just a little bit about that, but let's expand. So, if you are familiar with having an employer, that employer is going to tell you when to come into the office. You're going to probably use that employer's equipment like a computer, office supplies. When you're self-employed and in the gig economy, you have much more freedom, right? You're choosing which customers you're going to serve, maybe through the app. You're providing the material. So maybe your car, or, if you're babysitting, you have your own things you bring to babysit the kids. So as someone who is in the gig economy, you're self-employed and you're responsible for additional things you have to do with your taxes. So you're going to keep track of your income, you're going to keep track of your expenses, and you're going to report your income and pay taxes in a different way than if you were employed. And we're going to get into each of those things individually. But the
So
big thing,
is that the
oh,
same thing as possibly being an independent contractor?
it is, yeah. So self-employed, independent contractor, those are all terms that mean about the same and is basically what you're doing in the gig economy.
Am I running a business?
Yes, technically you are. You're self-employed and you're your own boss. What type of business? There can be different things, but most of the time when you're self-employed, you're just going to file something extra with your taxes. We'll talk about that, a Schedule C, and that's going to report your business's income and expenses.
So we already had a questions and it
Yeah.
says I do food delivery on the weekends and get paid through my Cash App. Do I still report that? Is that income?
That is income. So we're going to get into here next what counts as income. And the IRS and the federal government, any dollar you earn, that's income and you got to report it. So even if you earn a little bit, I think we have another question. What if I don't make that much money from the gigs? Do I still need to file taxes? Do I need to still report the income? You definitely still need to report the income, even if you're doing it on the weekends or, if you're just doing a little bit here and there. It's income and you got to keep track of it. What counts as income is another question we get a lot. So, tips, there may be some new tax benefits coming in the tax law that talk about the taxability of tips, but it's still income to you. You still got to keep track of it. Same with cash payments, whether they're, over or under the table. You hear about people working under the table and they think it's not taxable, but that's not true. Any dollar a taxpayer earns is income to them, and it needs to be kept track of and reported to the IRS. A lot of times
So
now people,
I have clients, and I'm sure you do too, that say, but wait, I went to my tax return preparer and they said if I earn less than this amount of money, I don't have to file a tax return.
and
But
that,
this is different.
yeah, that's a separate question. So when you're talking about what counts as income, just about any money that you get from a job is going to be income to you, and it counts as income, and you should keep track of it. What a tax preparer is talking about is a filing threshold. So sometimes you have to earn a certain amount of money before you have to file. If you're a wage earner, if you're employed, it's a higher amount. Self-employed individuals generally have to file if you earn, I think it's just even $400 self-employed income.
$400.
Yeah, it's really low. So you just got to keep track of all the income. You have to report it. And, these types of things you see on your screen, these are all income. A lot of times nowadays, people are paid through Venmo, Zelle, Cash App, things like that. That's all income to you. You have to make sure you keep track of that so you know what your total income is for the year.
Whoa, that could be confusing if I have a bank account and I'm going through Venmo and I'm getting Zelle and they have a Cash App. So, but of
Yeah,
course, we say, why does this all matter?
yeah,
And it matters because at the end of the year, you're going to have to figure out what to put on your tax return. And there are two types of taxes that you need to be concerned with. Now, the software that you use, and everybody uses some kind of software to do the math, will figure out how much tax and what kind of tax. But here are the two kinds of taxes that are involved. The first is self-employment tax. Remember, we said you're self-employed. That means there's no employer paying any taxes for you. And normally, part of your Social Security and Medicare taxes are paid by the employer, McDonald's, Walmart, whatever it is. They pay your part of your taxes. Now you've got to pay essentially the whole thing. So that the computer, the calculator, the software is going to figure that out, but that's an additional burden that you have to pay the self-employment taxes. And then on top of that, on your net income, you have to pay income tax, just like you would if you were an employee. But the problem is you haven't paid in anything. So it can be a really, really tough slap in the face to see all of the taxes piling up. So at the end of the year, we're going to figure it out. If it's your first time, it's going to be a little hard, but that's okay. What we're going to tell you is you got to keep records. So you've got to track all your income and track all of your expenses. So there are many methods of keeping track of your income and expenses, and some you can use, right on your phone. Um, Now, one thing you got to think about with, for example, Uber, um, here's a graphic right there. We have that this is the money you got, but minus the Uber fee. So you need to reconcile this or figure this out in your bookkeeping. Chances are what you're going to keep track of is I got $129.94. They've already taken out a fee, so that is not actually one of your expenses. Your income is 129. They've already taken the fee. But from that 129, you can spend that money on your expenses. So this is a little hard. It's a little hard to keep it all in perspective. And the most important thing is if you wait to the end of the year, it's going to be virtually impossible for you to piece things together, and you're going to miss out on expenses that you might be entitled to take from your income to determine how much is taxable. So it's really good to keep right on top of it. And that's where apps can be really, really help because you can use it as you're working to keep track. Now you can use paper. It's okay. We can use paper. You can write down your expenses, but you got to keep your receipts. Uh, and so here we have some suggestions to track all your income, save your receipts, use a notebook, and maybe save screenshots of things on your phone so that you can put it together later. But the more you do it right on time, the better off you're going to be. And the most important thing is to keep good records. And we found this entertaining video on irs.gov about keeping good records.
Sie should get like some tips.
Account my tips? No, that's not income. That's a gratuity for good service and my winning personality.
It counts as income. I'll also need all of your allowable expenses for equipment, supplies, etc. If you keep careful records, to reconstruct them to the best of your ability. Otherwise, as an ethical preparer, pay your taxes.
Well, I am good at construction. Tell me what to do.
So we're going to tell you what to do.
Yeah, and we did have a question that kind of relates to that. What if you didn't keep track of your expenses for the year? Is there anything you can do to recreate those expenses?
Ah. Christina, do you have any suggestions?
Yeah, so, first you're going to have to know what is an expense. What should you keep track of, right? So different expenses, you're going to, depending on the work you do, you might have different expenses than someone else. So expenses are anything that's ordinary and common for the type of work you do and that are necessary. So let's take an Uber driver. What are some expenses that are probably ordinary and necessary? Fuel for your car, maintenance for your car, maybe a cell phone to have the app on and you can get customers. So these are things that are, as Jennifer said, very important to keep track of throughout the year. But if you didn't keep track of them, maybe there's a way you can go back and recreate them. The apps do have data that saves that you can go back and access. Maybe you can look at your bank statement or your credit card receipt and highlight the expenses that are associated with your business. So there are ways to recreate them. But as Jennifer said, it's best to do it as it's occurring. But if you can't, that's something that maybe your tax preparer and other people that can help you, we'll talk about that next, can help you recreate so you do have those expenses. Because those expenses are important. Those expenses equal deductions. And deductions are a way that lower the income that is subject to tax. So by keeping track of your expenses, you can claim deductions and pay less tax, which is what everybody wants to do, right? So some examples we have here is mileage to and from the job site. And this is true even if your gig isn't dealing with your car, maybe you're babysitting, but to and from where you're babysitting, that can be tracked and that can be listed as an expense and a deduction. So we also have another question. What can you write off your phone if you use it for your business? And what they're saying when they say write off, they just mean, can they list it as an expense? Can they use it as a deduction? And you can, if you use your phone for your business, like you're accessing the apps, you're finding jobs using your phone, you're talking to your customers on your phone, you can use your phone expense as a business deduction. And there's a really great IRS publication that we point you to there, 334, Chapter 8, that talks about different expenses. But just know if it's something that's ordinary and necessary for the type of work you do, you have an argument that you should be able to use that as a business expense. And so we talk all about income, expenses, and what's the point here, right? Well, Jennifer says we're going to. Oh, go ahead. Sorry.
No. Well, Christina and I, confront this all the time, and we prepare tax returns, but you can prepare your own tax return. So what are you going to do on your tax return, Christina?
So, you're going to file an individual return like you always have, but you're going to add maybe a schedule or two here. So what we say here is you're going to file your annual tax return and you're going to attach a Schedule C. A Schedule C is just a form. It's a tax form that lists all of your business income and expenses. So the IRS knows what you earned and what you're able to write off. And that's going to help you calculate your total income for your business and for yourself personally. Something else that you are going to have to do as self-employed, as Jennifer mentioned, you don't have an employer sending your taxes each paycheck to the IRS for you. Nobody's withholding anything from your wage or from your income. So you have to do that yourself as a self-employed individual. And the way you do that is you send what are called estimated quarterly payments to the IRS or the state maybe you live into as well. So what are they? They're basically, you look at your total income for the year, you think about some expenses you might have, and you estimate how much you're going to owe. And then you're going to divide that and send it quarterly to the IRS. So you're sending advance payments of what you think your tax liability is going to be throughout the year. And the IRS requires that. Just like if
Do you have a rule of thumb for their first year of how much to send in for estimated tax?
No, I don't. Is there a rule of thumb?
I've heard people come into me and said, well, I heard it was 15%. I heard it was 10%. And the self-employment tax is going to be just over net just over 10%. So I tell people, well, we don't know how much income tax you're going to have, and but just to pay the self-employment tax, you better be putting aside. Some people just put it aside and don't send it in. Their tax liability is very low. There's a penalty for not sending it in during the year. So you want to try to send it in or put it into a savings account, put it aside in some way, shape, or fashion. Once you do it that first year, the second year is way easier. And
Mhm.
the tax program, can generate those coupons for you automatically.
Yeah.
That's a real big help.
Yeah, definitely. So it's, better to save something than nothing. And it's always better, if you can consult maybe some free tax advice through an LITC or someone else that can help you estimate those taxes. Because as Jennifer said, if you don't send in any payments or if you don't send in enough, you could just have an additional penalty and have to pay more money. And we definitely don't want that. So how do you get, this is can be very overwhelming, especially your first year. So what if you want some help doing your taxes? There's some free resources. You could always pay a tax professional to help you, but there are free resources like VITA, which is Volunteer Income Tax Assistance. There's usually several sites, at least several sites in every single US state, and they can help you do your tax returns for free. And they're actually individuals that volunteer and are trained by the IRS on how to do taxes, and that's really helpful. But we did have one question that says, what if I didn't file taxes last year or previous years? Who can help me with that? And I'll throw that back over to Jennifer, and maybe she can tell you a little bit more about LITCs.
Right. So if you have a prior year problem, sometimes VITA can help and sometimes they can't. It depends on the volunteer income tax assistance site as to how much capacity they have for helping with prior years. But when we have people calling us at the LITC, we interview them for their ability to do their own return. We can send them to a place to do it for them, like VITA. Um, or ultimately, sometimes we do the tax returns at the LITC if it's a prior year. We don't at LICC do current year tax returns. So somehow you got to muddle through and figure out how to do the current, but the prior year is often a stumbling block. And if you owe money to the IRS, you've got to get those prior year tax returns in, or the IRS literally won't discuss your debt with you because they say, well, how much debt do you have? We don't know because you haven't done these tax returns. And then they usually give you a time frame for how long you need to get those tax returns done. And if you're talking about prior year with self-employed, then it's even harder because collecting those records can be difficult. But once you do 1 year, you should be good to go for all the prior year, all of the subsequent years, and you should be in good shape. So Christina's at Michigan State. I'm at Legal Aid of Arkansas. Christina helps people in Michigan. We help people in Arkansas. But no matter where you live, we can direct you to a helper. If you're a low income taxpayer, our mission is to help you deal with the IRS and be a compliant taxpayer going forward. So thanks for joining us today. Thank you, Christina, for
Yeah, thank
helping
you.
us out with explaining everything. And see you next month on our Facebook Live.
Bye, everyone.